What's going on, guys? Welcome back to my channel, and in this video I'm going to teach you guys how I made $10,000 today trading just one single candle. And this one single candle, not a lot of people talk about, but I use it all the time in my trading to frame an easy day buys and get precise entries. So in this video I'm going to teach you guys what this candlestick is, how to use it to create a day bias, how to use it to get precise entries, as well as I'm going to give you guys the live trade example that I used this morning to make a little over $10,000. Make sure you guys watch till the end of this video and take notes, because this is something that's really going to help your trading. But before we begin, make sure you guys click that like button. It only takes 2 seconds and it greatly supports the channel. Thank you. The main candlestick that we're going to be talking about is referred to as a pin bar or a rejection wick. So essentially the pin bar or rejection wick looks a little something like this, where price creates this opening, we have this rally higher, and obviously price cannot continue going higher, and then we see this drop to the downside, coming back into the opening and even lower, creating this long rejection wick to the upside. The main definition of the pin bar or the rejection wick is when price is in this formation creating that long wick, this signals a rejection from either a high point or a low point inside of the marketplace. And this tells us that either buyers or sellers are currently in control. We can see price rallied up, came higher, and then sellers became in control, pushing the candlestick back lower. In this case scenario, price opened up, rallied lower, buyers came in control, and then pushed the market back higher. This gives us a clear outline of who's in control and whether we should expect higher or lower prices based off of this one signature. So obviously the pin bar is very important, but this candlestick alone does not work. We need context. The context behind why this candlestick works and what it truly means, we need to understand the overall narrative. The reason of why this candlestick is important is because this candle on the lower time frames is a manipulation where price will open up, come higher. Obviously we reach a level of resistance where price cannot continue going higher, and then we saw this lower prices. On this higher time frame here, let's say this is a 1 hour candle, price opened up, create this 1 hour high, then we see this drop lower. This does not give us enough information. But if we look on the lower time frames here, let's say this was the 5 minutes here, this 1 hour candlestick then transitions to this 5 minute lower time frame structure, where we can see price was in an uptrend, creating higher highs and higher lows inside of the marketplace until price reached up into this resistance level. Once price reached up into this resistance level, we can see we had this internal breaker structure to the downside, creating lower lows and lower highs inside of the markets, creating this rejection wick. On the higher time frames, 1 hour, open, high, low, and close. On the lower time frames, we build that internal structure that gives us the overall context. Once we see this rejection wick here, especially on the lower time frames, we can trust that this high point of the overall structure then becomes a strong high, right? Price had already opened up and came higher into this resistance level, followed by this break to the downside. Price is not going to come back up above this previous high. We can classify this high now as a strong high, meaning this rejection wick high right here is our strong high inside the marketplace. So essentially price should see a retracement for a continuation to the downside. This gets us into our next lesson, which we can identify our quadrants. So obviously we have this long wick level right here, very, very important. But inside of this long wick level, we can use a Fibonacci tool and we can get our overall quadrants. We have the 25, the 50, and then the 75 of this long wick level, from this wick high to this wick low. The 25, 50, or 75% acts as a resistance zone. So once this candlestick closes here, let's say this was a 1 hour candlestick like we mentioned, once this candlestick closes here with this long wick, if the next candlestick opens up, we can see price coming back up into either the 25 or the 50% of this range before continuing back lower. Sometimes price may come all the way back up into 75%, but for the most part, we want to pay attention to specifically the 50 and then the 25% of this range. This acts as a resistance zone to anticipate lower prices reaching back lower and lower. As you can see, the next 1 hour candlestick opens up, comes back into the 50% of this range, and then we see this overall drop to the downside. We can use this as a frame of entry, reaching back lower prices. On the lower time frames, it looks a little something like this. On the lower time frames, these 25, 50, and 75% are simply just previous highs inside the marketplace. So this is the 25%, which is this old high. The 50% here is this high right here, and then the 75% is this high all the way up here. We know price is not going to break back above this high. Once price comes into 50% here and sweeps this high here, this then creates a turtle soup to reaching back lower prices. So essentially, when I'm looking at the 25, 50, or 75% of this long wick level, I'm simply just identifying this as a lower time frame pool of liquidity. Price came into the 50% here on the 1 hour, but on the lower time frames, price came higher to sweep this previous high. This one candlestick alone, which is called the pin bar, or I refer to as the rejection wick, gives me a lot of confidence whether price is going to anticipate higher or lower prices. Price first has to tap into a level of resistance, right? We have a level of resistance up here. Price taps into that level of resistance, giving this long wick to the downside. This wick level then frames our entry. Once price closes with this long wick here, we get the 25, 50, and 75%. If the next candlestick opens up, comes within the 25 or the 50%, this will act as our entry, reaching back lower prices. And on the lower time frames, it looks a little something like this. So from the higher time frames to the lower time frames, everything comes together to frame our overall narrative. Now that you guys understand what a pin bar and a rejection wick is and how we use it, I'm going to take you guys into charts and show you some live trade examples that I use myself using this one framework, and how I'm able to catch the highs and the exact lows of this range using just this one model. Now that we're on the charts, I'm going to break down this trade here, which made me a little over $1,500 using this one simple model. Before I show you the overall executions, we have to start from a top-down analysis approach. On the day time frame, it's the exact same thing. We use these previous long wicks as levels of support and resistance. So we can see we had this previous wick here from Monday. We had the opening, looks like price swept a level of liquidity, and then we had this rejection to the upside. This then created that pin bar. And as you can see, price opened up and it came within the 25% of that pin bar. We talk about the 25 to 50% as that hard time frame support and resistance level, right? Price came into the 25% and then it saw this overall rejection to the upside. And then we can look at the prior day. We can see price came lower into that 25% and then it gave this rejection to the upside. We can now utilize this pin bar as a level of support and resistance. So we have the 25, 50, and 75%. So essentially, now that we've identified our overall levels of support here, I want to see the next day open up, come within that 25, 50, or 75% as a level of support to then reach back above higher prices. And obviously, the higher prices that we're going to be targeting is these previous daily highs. On the day time frame, this is a very good model because price usually respects these long wicks 9 times out of 10. We can see right here, we had that pin bar right there. Given that rejection, price came to 50%. Then we saw that drop to the downside. Boom. Price right here gave this pin bar at these lows. Price came down into the 25%, gave this rejection to the upside. So on the day time frame, this is a very, very good setup. And obviously, we can target these previous day highs. So my overall understanding for the day is I want to see price open up, come lower within this previous daily pin bar, right within those quadrants, and then we can target opposing levels of liquidity like this previous high and potentially even all the way back up here into these previous weekly highs as well. Now I'm going to go down to the 4-hour time frame to gain additional context. So essentially, now that we're on the 4-hour time frames, we get additional context. We can see here that price had opened up right here at around 6 p.m. right? That's the new day opening. And then we saw this drop to the downside. These consecutive lines right here that stem across, right? These are the quadrants. So essentially, this line right here, as you can see, this line that stems across, that's for 25%. This line right here, that's the 50%. And this line right here is the 75% of this range. So as we can see, price throughout the London session came down into the 50% right there. Price came down into the 50% right here, which is also in alignment with this previous order block. So we can identify this previous last down close candle right here as our bullish order block. Price not only tapped into this bullish order block, which is a higher time frame support level, but we're also in alignment with the 50% of that daily rejection wick, right? We can go back to day time frame, the 50% of that daily rejection wick, where we had that opening to the low of that wick level, 25, 50, 75%, that 50% right here. Back on the 4-hour here, we're also in alignment with this daily bullish order block. So obviously I can identify this low as a strong low inside of the marketplace. So obviously once price tapped into this order block level plus this 50% of this wick, it gave this reaction to the upside, meaning that this previous low then becomes a higher low inside of structure, right? We can see price creating higher highs, higher lows, higher highs, higher lows, and now we've seen this higher high here. Price came lower, establishing this higher low right there. So obviously my main emphasis throughout the trade day is I want to see, can the market come back lower, right, to create a higher low inside of market structure, respecting this previous low to potentially go higher, right? Because this is the low that came lower to tap into this level of support, right? So once price tapped into this level of support and then left it, price has no reason to break back below this low, right? Because this area is already mitigated, right? Price has already tapped into this level and left it. Price has no reason to break back below this level. Instead, if we do see a pullback, it should respect it for a continuation back higher, and we can target these previous daily highs. So this is just how you create a daily bias inside of the marketplace, is by paying attention to where has the higher time frames been and what is the overall structure of the markets. Now I'm going to go down to the 1-hour time frame to frame more setups. So essentially on the 1-hour time frame, we can already identify this previous low right here as a 4-hour order block, which price came down into to find support to push back higher, right? This is now a strong low, meaning any last non-close candle above this strong low will be identified as a bullish order block. So obviously we have this last non-close candle right here. We can extend this forward, and if we can see price come down within this last non-close candle and find support, it would be a high probability setup to reach back above higher prices. The sentiment of this is we're following the overall trend. Price is currently in an up market. We can also see from the previous day here, we had that long wick. Price came to the 50% of that long wick to push higher. This one model happens all the time inside the markets. My main emphasis today is to see price come lower into this order block level to find support to reach back above higher prices, which is these previous day highs. Now, last but not least, we have to put it in alignment with time. Since I'm trading the S&P 500, the New York Stock Exchange opens up at around 9:30. So I'm going to wait for 9:30 to open up to see this pullback into this range for me to then frame my long, reaching back above higher prices. It's really that simple. So essentially we use the pin bars and the rejection wicks from the higher time frames to frame our overall narrative. So essentially once we frame that narrative and price came back within that pin bar, we understand that this is now a strong low and the overall market structure is higher prices. So essentially now I'm going to go down to the 15 minutes time frame and let's get our entry. Now I'm on the 15 minutes time frame and I want to identify these previous highs as a level of liquidity inside the marketplace. We have that 1-hour order block all the way down here at these lows. When I'm trading, my goal is not to buy as the marketplace is going higher. Price at this point is already overextended. I want to be buying within a discount, meaning if I anchor a Fibonacci tool from this low to this high, I want to be buying right when the marketplace is coming back lower to give me a great entry, reaching back higher prices. You don't want to be in a position to where the marketplace is already going higher and you're chasing the markets. You always want to be in control as a trader and wait for the marketplace to come to you. Now the 9:30 is about to open up. I want to see if we sweep this level of liquidity to potentially come down lower into this order block level for me to frame my overall entry, reaching back above these higher prices. We can see that 9:30 open up here, swept this level of liquidity. We can see we had a drop lower here. And then as we can see around 10 a.m. we had news, right? Price opened up and saw this immediate drop to the downside into that order block level, just like we mentioned. And then after tapping into that order block level, we see this strong rejection to the upside. What does this mean? This means that once price tapped into this higher time frame support level, which was obviously that order block, buyers started to buy. The pressure from the buyers was so high that price created a long wick inside the marketplace. These are the little clues that you want to look for when it comes to identifying when smart money is positioning themselves inside the marketplace. We had that order block, price tapped into it, and it gave an immediate reaction to the upside. This is a bullish signature that we want to look for, making this previous low as a strong low. And what we can do, like we mentioned here, we can split this wick into quadrants. So we have the 25, the 50, and then the 75 of this long wick level. I like to put my entry between the 25 to the 50% because that's usually where price heads to. I like to put my entry between the 25 or the 50% of this long wick level. In this case scenario, as the next candlestick opened up and was driving back lower, I placed my entry right here around the 25 to 50%, and I had my stop loss just back below the 75% of this long wick, because usually if price comes all the way down to the 75% of this wick level, most likely it may want to break back below this original low. And then I had my take profit reaching just back above these original highs here for about a 2.38 R. So essentially just keeping things very simple. This candlestick opened up with news, came down into this 1 hour order block, gave us that 15-minute pin bar. Now on this next 15-minute candlestick, I want to see us open up, come within that 15-minute pin bar to find support to reach back above higher prices. We can see price coming down into the 50%. Look at that perfectly. As you can see, price comes higher, takes out that previous level of liquidity, making me a little over $1,500 across all of my funded accounts, which made this day a little over $10,000 using just this one concept alone. You can use the pin bar to gain a daily bias. Like we mentioned, from the day time frame, we had that long wick. We're anticipating price to come into that long wick level to establish a low to push back higher, or you can use it as a frame of entry. As you can see, price came down into this 1 hour order block, gave this long wick pin bar, and then we use it as an entry. Whether you use it to frame a day bias or an entry, whether you use it for a day bias or an entry, this is a very powerful candlestick that not a lot of people know that I just taught you. So essentially that's going to be it for the video. I hope you guys got a lot of value from this video. And if you guys want to learn more just like this, plus daily live trade with me and my brother every single morning, you guys can click the first link in the description and join the Spark Train community. Me and my brother are daily live trading. We post trade breakdowns as well as weekly backtesting with all of our students, plus access to 100+ hours worth of additional lessons, playbooks, PDFs, and much more. If that's something you're interested in, that's going to be the first in the description. But before you leave, make sure you guys click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. I'm your new mentor, Arkhamtrades. Be safe.